Welcome back to this session of International Business Environment. Uh, I do know there were a lot of issues regarding the network in our earlier session. That particular part I would record and would upload it and send you all the link for that. So, might be in this session you would be able to hear clearly. So, now we were speaking regarding the advantages or the merits of FDIs for an economy. In this particular session, we shall see what are the advantage of FIIs for basically to speak or distinguish, separate it between two and to tell what are the merits. You'll have to know in clear terms what is the difference between FDIs and FIIs. And because there was some kind of distraction in earlier session, uh, should I tell it in briefly it once again? Okay, shall we discuss so that you can hear it live and there is no necessary once again you would go back and listen it once again. Maybe I'll take 10 minutes and tell it. Okay, so FDIs, we know that investment would be done from foreigner. That has to be the basic criteria. Okay, but under FDI what happens, the investment would be made in all kinds of assets of a company. Okay, and those would invest under FDI, they would have interest in the operational activities also, and they would be having interest in the management of company altogether. Okay, usually when we speak about modes of entry for an internal business, or when we speak regarding the different kinds of foreign investment, could it be in the form of merger and acquisition, or could it be in the form of greenfield strategy, or licensing, or franchise? Now, these are the ways through which FDI is possible. So, usually it would be done for the purpose of business. Okay, and usually they would be like in the form of the subsidiaries of a parental company. That is to tell, if at all we take into example an MNC or a multinational company, usually they would have their main office in their own home country. Whenever they invest in different countries, they tend to do the same activities, and it would be called as subsidiaries if at all if we speak in terms of international business. But under FDI when we speak, it is the same thing, but the investment that has been made would be called as foreign direct investment. That is all regarding FDI in brief. When we speak about foreign institutional investors or investment, here the investment would be made especially in the securities of a company. Okay, those who invest, they will not have any kind of interest over the managerial activity of a company. So, if we think it in a practical sense, we can see that usually the FIIs would happen only in the stock market. Those who have interest, those who are willing, and provided the government has given certain specified companies where the invest could be made, the investors, if they are willing, they would be investing. And usually the investment on one particular or one single company, it has to be less than 10%. Only then it would be called as foreign institutional investment. And they would be having no or zero interest over the management of the company. Not only that, speaking regarding FIIs, even the NRIs can invest in certain specified securities. But neither the foreign investors nor the NRIs would be having any kind of opportunities given to invest either in the defense securities or in the primary securities of the country. And speaking of the merits, FDI is more beneficial than that of FIIs, with the sense that whenever the investment is done under FDIs, there would be overall development of the economy. But under FIIs, definitely there would be development. The development would be more in the financial securities or financial market. Now, this is all that we had discussed in our earlier class. Okay. We also tend to discuss in terms of difference. Now, the meaning, investment usually would be made one under including all kinds of assets, even in intangible assets or non-financial assets like technology, intellectual capital would also be done under FDI, but under FIIs, the investment would only be done on the securities. Now, securities can be equity shares, it can be bonds also. Okay, now each of the term that is being said or discussed, you'll have to know the meaning of all those things in specific. Only then you can extend your answers. Now, speaking regarding the management, we have already discussed under FDIs, they would have some kind of or all kind of interest in the management, but under FIIs, there would be zero interest in the management. Speaking regarding earnings, in FDI, earnings can be in the form of dividend, interest, royalty, fees, any other kinds of consideration. Under FIIs, it would only be in terms of dividends or in terms of interest, based on whether they have invested in equity or any other shares or in bonds. Now, liquidity, FDIs are lesser liquid than that of FIIs. And usually FDIs would be for longer time period, FIIs would be for shorter time period. Now, the merits we have already discussed. And speaking once again, now until or up till this point, we had discussed our first session. Now, all that we have discussed are very, very simple topics. Okay. Anyhow, I would be giving you handouts. Now, everything has been given in your handouts in detail. You once if you read, you will, and you definitely can understand. So, I would not do any other recordings for the first session, because barely we took only 20 minutes in the first session, if I am not wrong. Could it be online or offline because of the network issue? And the next topic that we discussed was regarding impact of FDI and FIIs. And we had completed regarding FDI in the first session. And the advantage can be in the form of, decrease in the poverty, and there would be increase in the revenue for the host country, and it would be exposed to different kind of developed skills or intellectual properties, and also the employees of the host country would be benefited in terms that their salaries and wages would be increased. And also the export market tend to be benefited because of the FDI investment. So up until this point we had discussed. Now come for the impact on FIIs on economy or foreign institutional investment. Yes. Now see, FIIs are a bit different than of FDIs, so a little bit of concentration is necessary here. Unless like FDIs might be will not able to write it in general. Okay. Specifically when we speak about FIIs, remember one, we are concentrating on the financial securities or the securities market. So whenever you tend to write regarding FIIs, the benefits, keep that particular point in your mind. FDI, the entire economy we can take. FIS, we are being specific for financial securities. Okay. Now under FIIs, what happens? The investment would be specifically focused on capital markets. Yes, and when the more and more investment is done, what happens? The domestic capital market tends to be more liquid. Okay. Now, if at all you want a clarification regarding this, there has been a study done, okay, how the capital market of India was earlier and what happened when India undertook the liberalization policy in 1991. And when they compared these two, there was a steady increase in the liquidity of Indian capital markets before the liberalization and after the liberalization. You need not be very, very specific, but when you give example, you can tell that the Indian capital market had seen a substantial increase in terms of liquidity before liberalization and after the liberalization policy, which was undertook in 1991. So, you people understanding what is liberalization, globalization, and privatization is very much necessary. Okay, especially for your fourth chapter or your third chapter. Now, one more thing, please do not sit and by heart any of the topic. Please do understand. Once you understand, you will be able to write on your own. Now, sitting and studying is important because you usually have a complaint that you did not have enough time to write. Now, when you read, you can just think on writing. But when you do not read, what happens is you'll have to form your answer. That is where your time flies. So now the subject is very, very easy, irrespective of when your final exam would be. Please concentrate on studying. Okay? It is now IB such a subject that once you read, there is nothing that you'll have to forget in any time. Okay? So understand it once and IB is very much easier. Now that was the first advantage. Speaking about the next, as I said earlier, the depth and the breadth of the financial market tends to increase. What is depth and breadth of a financial market? Depth is more and more money would be involved. Breadth is that more and more players would be included in the market. Now you do know who are the players in the market. All kind of investors and the rest other parties who makes the financial markets live or that it works on a continuous basis. Those would be called as the players of the financial markets. Okay. Okay. Not only that, because we are speaking regarding players of the financial market, Now, one more advantage is that every player in the financial market, they experience a greater role. Okay, because they will have more and more exposure to other financial market, and also they would be having additional opportunity to invest and thereby earn more. If that is in terms of the additional opportunities for investors, what would be opportunities for borrowers? See, whenever it is capital market, there would definitely be two kinds of people. Those who invest in the capital market, those who borrow from the capital market. Who are the borrowers, by the way? The company themselves, right? They are borrowing the money from the capital market. The investors are investing, and from the capital market the companies or those who have issued these securities will be borrowing. Now investors, or for that matters, the players of the financial market will be having more advantage because they have more opportunities. When they have more opportunities, definitely it would help them earn more. Yes, and the borrowers, how do you think they will have an advantage? Now, because there are different additional ways in which they can borrow, the expense of borrowing tends to decrease. Okay, that is the main advantage for borrowers. Now, the next one is you might have heard regarding corporate governance. What corporate governance? Before we continue. Now this was there for your second semester, and it was there in all the subjects, but some of you had taken corporate social responsibility and corporate governance as a elective. Yes, yes. What is corporate governance? Now understanding corporate governance is very much important. It can be, see, now corporate governance and corporate social responsibility are two very different things. Okay, I will tell it in brief, but you being a graduate, irrespective of your MBA or MCom graduate, you'll have to know what these two particular things. Speaking about corporate social responsibility, what it tells is that the main idea behind corporate social responsibility is that it tells that every business, it is situated in the society. It exists because of society. It makes uses of, it can be resource, capital, the human force. Everything it takes from the society. Only then can corporate, you know, or these corporates or companies, they can earn profit. So when they use everything from the society, definitely they'll have to give something for the development of the society. That is the main idea behind your corporate social responsibility. Now there are many companies which does it without the obligations of the company. But under the new Companies Act, the government had made it compulsory for corporates. Okay, the name itself tells it as corporate social responsibility. And when they are being so specific, it is especially for the corporate companies. Okay. Now it is one of the regulations that these corporates have to follow, that a minimum of 2% of their profit. Now you have different criteria regarding all these things, how the profit should be calculated, whether it is average profit for a particular year or for 3 different years or 5 different years, or whether it would be some, there are criteria regarding that. Those who wish, you'll have to know it in specific. Okay. Now, it would be 2% on the corporate profit. That is to tell, for every 100 rupees that company earns, 2 rupees has to be given back to the society in the form of what? Yes, social, than telling social responsibility, it is in the form of donation you are giving. You are not expecting anything back. So that is the idea behind corporate social responsibility. 2% is minimum. Based on companies, it can do any number. Might be you have come across many of the things. Okay, some have developed roads. Some, yes, Infosys. If you see nearby your college campus, the Infosys, it is developing roads. Some other companies tend to give some facilities, might be like, drinking water, different institutions, they tend to provide drinking water facilities, or for that matter, solar power facilities. Okay. Now that is corporate social responsibility. Now for corporates, it is mandatory. Those who earn above a certain specified limit that has been given under New Companies Act of 2013. So if that is corporate social responsibility, what is corporate governance? See, it is for corporates undoubtedly. Simply means it is for bigger companies, not for partnership or other kinds. Yes, it is for private limited or public limited. Yes, it would be for these companies. Okay. Yes. So, what do we mean by governance here? Social responsibility we understood. Okay. What is it? Now I said regarding social responsibility only because I had to speak regarding governance. Okay. Now you had an entire subject regarding what is CSR. What is governance? Governance is tax. See, government is different, governance is different. We are especially concentrating on the word governance. Govern. What is govern? What does government do for that matter? We can start from there. It has all these rules and regulations. We are meant to follow that. Yes, and see to that there is our development. Whatever it does for us, for our good. So governance might be a thing like that. What is governance? Okay, we can tell that. Okay. See, what happens in corporate? There is always a separation between the ownership and management. Most of the times, can we tell that the owners are different, the management is different? That is to tell, one who does the day-to-day activities, they are different people, whereas the one who owns the company, they are different. Yes. Now, usually the owners wouldn't know what happens in the day-to-day life of the company. Yes, and also from the point of view of this management, They have to tell the owners where the money has went, how is it being invested from, or how is it being used. Yes, this is very much necessary. Otherwise, what happens? There would be most of the times conflict between the owners and the management. Yes. Now, corporate governance is such a concept which is like which opens up for this owners of the company. Might be in terms of bookkeeping, might be in terms of operational activity, or every other activity of the organization. They are keeping all the books, how it has to be kept. They are telling the owners, or they are making them understand what they are doing. I would give you the meaning, but then this is the idea. See, now it is very much necessary that the owners understand what is happening. Yes, so that they'll have to be open. Now, you might have heard the scam regarding Satyam computers. What was that? Or for that matter, the scam of the Enron company. Nowadays, you know only one kind of scam which you see in the form of movie. Ah. Forget about that scam. Now you will have to also know the difference. What is the Satyam computer scam all about? Now, what happened was Satyam computers, they had manipulated books in such a way that they had given crores and crores together of salaries or wages for thousands of employees who were not at all working in the company. So, what happens that time? Now, those who had done the scam, the money goes into their account. But what does owners think? That the employees are being paid. That was what had happened with Satyam Company. Now, all this happens when there is no clear-cut discussion between the management and ownership. Corporate governance tells that whatever is being done, the others should know. Okay? Now, if at all you want the definition, now, this is the idea. When you write the definition, it would be a little bit different. Now, no, this is just the basic idea. If you study in detail, both corporate social responsibility and corporate governance is a very interesting subject. Now, corporate governance, you can take down, is combination of is the combination of rules, process, or laws by which by which business are operated by which business are operated, regulated regulated or controlled or controlled. The term encompasses the term the term encompasses the internal and external factors that affect the that affects the interest of a company's stakeholders, yes. So now stakeholders are none but who, see, it includes management also, but whoever are outside of management and are included in the activities of the business are called as stakeholders. Or stakeholders simply means whose interests are involved. It could be the shareholders, the creditors, the debtors, the government also for that matter. So what is corporate social responsibility? Yes, do you need the meaning or is it fine? Okay. Now we were speaking regarding the impact of FIIs. So there we started speaking regarding corporate governance. Okay. The impact of FIIs nobody would ask you, but what is corporate governance? People would definitely ask you. So whenever such things comes, I do not mind I'm going out of the topic. I don't mind if you think. So telling is the responsibility what I have to take. Okay. Now, what happens whenever so you know the meaning of corporate governance? It tells that it has to be done according to certain set of rules. Whatever the working is done under the company, it has to be done according to the rules, and it is done that to to show the stakeholders that company is doing well. So when all the steps are taken by a company, what happens when it is working according to the corporate governance? Definitely, what happens? Okay, go. See, what happens is that the faith of the investors on the company tends to increase. Yes? So when the faith increases, definitely there would be more and more investment happen. That is the case. Okay. Now speaking regarding the benefit, it is said that the entire corporate sector witnesses an increase in the adoption and implementation of corporate governance. Okay. Now, when they implement and adopt, what happens is that the corporate governance tends to give an edge in the capital market, and it would help for the company both economically and also efficiently. So corporate governance, whenever you hear, one word that you should remember is transparency in the working. Okay? Whatever we said regarding corporate governance all this time, it is nothing but there should be transparency in whatever the company does. There should be no any kind of hiding. Yes. Now, what is one more uh, benefit of FIIs? What happens under FIIs? Whenever there is more and more openness for the foreign investment, the market tends to get exposed for more sophisticated tools and also technology. Okay? Earlier it might be only telephone. but now it is done electronically through computers. For that matter, whether this technology of computer developed in India, or did we have that technology transfer from some other country, some other foreign country? Yes, we did not develop here. So whether it is exposure because of all these things, when you have market, when there is market in some other developed countries, you tend to see how they work. Now if they were how they was more efficient, definitely we try to adopt it from other countries. Yes, so that is what they are speaking here. Yes, now that is all about the impact of FIIs on Indian